To finance news now, and the Reserve Bank is warning about a housing bubble in Sydney, but it's not seemed to worry the Prime Minister, Ricardo. He wants to see Sydney's house prices continue to rise.
Sarah, that's what he said, but prices have stalled last month. CoreLogic RP data says the average capital city house price fell nearly 1% in May, with a median value of $570,000. Only two capital cities saw increases, and that's Canberra and Darwin. Prices fell the most in Hobart, where the median dwelling price is now $328,000, and Sydney prices declined by 0.7%. But remember, year-on-year prices are still 15% higher, and that's raising fears of a housing bubble.
It's Judgment Day on the...
Renovation shows are everywhere, and Treasury Secretary John Fraser says it's a sign of the way low interest rates are affecting Australian culture.
Historically low levels of interest rates are encouraging people to perhaps overinvest in housing.
He's told a Senate estimates hearing a bubble has been created.
When you look at the housing price bubble evidence, it's unequivocally the case in Sydney.
And he says in higher priced areas of Melbourne. As for Prime Minister Tony Abbott, who owns a home in Sydney,
I do hope that our housing prices are increasing. I do want housing to be affordable, but nevertheless, I also want house prices to be modestly increasing.
Australia's big banks have recently tightened their lending rules, making it harder for investors to take out a loan.
It will still be a while longer, I think, before we see what effect that might have on something like investor credit growth.
Property investors account for just over 1/3 of outstanding housing credit, the highest to date. And while official rates are down, what hasn't declined in line are credit card interest rates. The Reserve Bank's Malcolm Eadie told the Senate estimates there are several reasons for that.
Credit card lending is more risky for banks than mortgage lending.
He added the cost of funding has increased while the risk associated for this sort of lending has risen post-GFC.
OK, let's take a look at the Australian share market now, which didn't start the week well. Investors still worried about Greece. Resource stocks like BHP, along with the banking sector, were hardest hit. Myafel, it is closing some stores, including one at top right in Sydney, and biomedical group Surtec surged following a positive update on its liver cancer treatment. In Japan, the Nikkei turned higher, but only just at the end of trade. The Australian dollar is down against the greenback after a private survey on inflation showed prices remained contained. And on the commodity markets, both gold and oil are higher. So, the Reserve Bank Board meets tomorrow to talk interest rates, and it is unlikely we'll see another cut